Hey, Market Chameleons. Thanks for joining us today. And there's Dima. How you doing, Dmitry?
Good morning. Good morning, Will. Good morning, everybody. Thank you for joining us on a nice Thursday morning.
Yeah, a little cloudy here. How about you?
No, it's sunny where I am. It's always sunny in Philly.
Yep, Philly's a
That's
great spot. All right,
Yeah.
Before we get started, everyone who's joining us on YouTube Live, if you are seeing a little bit of a fuzzy screen, we are on Zoom as well, so I'll attach a link. And after we do that, Dima, do you want to get started with the disclaimer first?
Yeah, let's get that out of the way first, and then we'll begin. So while Will's putting it up, everyone, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, then go, call your registered investment advisor or call your broker, and they should be able to help you with your questions.
Awesome.
There's this disclaimer.
All right.
And here we go. Let me just share my screen now so we could get started. All right, let me know if you see it, Will.
Yep, looks good.
Okay, so what we'll do today, we'll go over what's moving in the pre-market hours, take a look at a couple stocks, then we'll take a look at what's upcoming up on the earnings front, see what the options traders are anticipating those moves. I'm going to go then to the open interest, look at some call options, long build up in the calls. I think we'll also take a look at the vertical spreads and look for some trade ideas in the vertical spread screener and leave room for questions. So that's the agenda for today. Now, this report, if you guys are joining us for the first time, this is looking at stocks that are moving in a pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to take a look really quickly, actually, at the higher market cap stocks just to see if there's anything moving there. I do see it looks like it's Abbott. That's up 7.6% in a pre-market hours on 870,000 shares. It's a high cap stock. Obviously, there's some news on there. So before we look at the other biggest movers, let's just take a look at Abbott, see what's going on in that stock, and take a look at, from a historical perspective, what Abbott did, after seeing a large gap up in the morning. So here's Abbott. It closed at 103.19. Right now it's trading at $111 in the pre-market hours. That's up 7.6%. The pre-market VWAP price, 111.99, almost 112, so a little bit below that pre-market VWAP. The range in a pre-market, 109.75, as high as 116.33, very wide range on 875,000 shares trading hands. The biggest, here's what the VWAP, here's what the price looks like in a pre-market hours. So that's the price chart in the pre-market hours. Two biggest VWAP bars here. I see one trading between $112.37 to $112.84 on 215,000 shares. Next one is 110.94 to 111.41 on 213,000 shares. There's looks like some news. I'm not gonna get into the news. I'll let you guys do that part of it. Looks like something with a COVID-19 test maybe. But let's just take a look real quick. How did Abbott stock behave historically after it's had a big jump in the morning? Okay, so gap up move in the morning. Let's see what happened historically. So this is looking at the last 3 years, filtering out the 12 largest opening gap moves. Here are the dates. These are the gap moves associated and any type of news or market related moves. You see the notes over here. So here we see on average, the last of the 12 largest gap moves to the upside is 3.7%. Today we're seeing 7.6%, so way above that average. I see a high here of 11.3% on March 30th. Looks like also something related with the press release of coronavirus, similar to this. So let's take a look at what happened after the opening. So the average move from the open to the high of the day was 2.6%. The average move from the open to the low of the day was 3.1%. From the open to the close of the day, we see that historically it drifted higher a little bit more often than lower, 58% higher versus 42% lower, for an average gain of 0.3%. So almost 50-50 there, nothing significant. Looks like the day after, though, that move, 75% of the time it was lower. The next day, 25% higher with an average loss of 2.3%. So that's really quickly what the price action history in Abbott after a bit large gap move to the upside. I'm going to close that, and let's then go back to the unfiltered report just to see what's popping up on top. So we've got this MOXC that's up 67% in pre-market hours of low cap stock, 34 million. That one looks like it has some news on merger talks. So since that's a merger, let's just take a look at the next stock, VBIV. That's up 34.3% in the pre-market hours on 8.2 million shares trading hands. Market cap on that, 742 million. Let me just see if there's some catalyst moves, and let's open that one up. Take a look at what's going on. Yeah, this is low cap stock in a biotech field. Closed at $3.21 yesterday in the pre-market. Right now trading $4.33. That's up 34.9%. We see the volume is 8.3 million shares in the pre-market hours. This is what it looks like. The price in the pre-market hours, big jump over here. Biggest VWAP bar between $4.28 to $4.36 on 2.5 million shares. Looks like it has some news out there, coronavirus vaccine. I'll let you guys read that. So let's take a look at how this stock behaved historically after gapping up in the morning. So again, this is taking the last 3 years 12 largest gap moves to the upside. As we see here, on average, 14%, and I think a high here of 26.2% on July 8th, 2020. Today, up 34.9%, so way above that high. So this is, if it opens here, that's all the way up on the high end. After the opening, let's take a look. From the open to the high, the average move is 8%. From the open to the low, the average move to the downside was 11.9%. From the open to the close of the day, it tended to drift lower more often than higher, 92% of the time. From the open to the close, it finished lower with an average loss of 6.9%. So this, again, take a look at the news. If anything's different today, you got to take that into consideration. Up a lot in the pre-market hours, up 30, almost 35%. Well, if you don't have any specific questions on the pre-market,
move on, buddy.
Huh?
You can move on. No specific questions of pre-market.
Okay. All right. Yeah. If you guys have anything specific, questions on any of the reports we're going over, just put them in the chat. We'll know, we'll stop and go over them. Otherwise, let me move on to the earnings front. Let's take a look at stocks that are anticipated to report earnings in the next 2 weeks. So over here, I'm going to go for the next 2 weeks. I'm going to filter out stocks that trade on average 10,000 option contracts per day or more. So that's what I'm doing here. And we're going to analyze this from the perspective of how the options are pricing the straddle. So this is looking at the money straddle, buying a call, buying a put at the money, seeing what is the magnitude of the move. And we're going to compare that to the historical average moves for that stock after reporting earnings. So over here, OKTA, that's report. Let me just see what's Okta. Do you know what that company does? Well, not sure.
I'm not sure, D.
Yeah, that's reporting today after the market close. It does trade 12,000 contracts on average per day. That's today after the market close. It's anticipating reporting earnings. Right as of yesterday's close, the straddle was implying a move of 8.2% in either direction. That compares to a 4-quarter average actual move of 3.5% and a 12-quarter average move of 6.9%. So we see 4.7% above that 4-quarter average, 1.3% above the 12-quarter average. The high move in the last 12 quarters was 19.5% in that stock. HPQ also today after the market closed, that straddle as of yesterday went out at 7.3%. That compares to a 4-quarter actual average move of 6.3% and a 12-quarter average move of 5.4%. So we see that's priced 1% above the 4-quarter average, 1.9% above that 12-quarter average, with a high move of 17.3% in the last 12 quarters. Marvel, again, that's today after the market closed. As of yesterday's closing prices, straddle was implying a 7.6% move in either direction, comparing to a 4-quarter average move of 6.3% and a 12-quarter average move of 3.9%. A high move on that in the last 12 quarters was 10.4%. This last one, GPS, today after the market closed, what is that? Is that Gap?
Yep, Gap Stores.
That's Gap. So that's implying a move of 10.3% in either direction. That's compared to a 4-quarter average move of 3.5% and a 12-quarter average move of 7.2%. And the high move on that in the last 12 quarters, 16.2%. That's in Gap over here. So that's what's coming out. We just went over some of the stocks that are anticipating to report earnings today after the market closed. That's how the implied moves compared to the historical average moves. Well, did you have any questions on the earnings? Let me know. If not, I'm going to move on.
Yep, nope, you can move on.
Okay. Let's take a look at open interest and see if we could detect any long buildups and calls. So this is looking today. We're going to look at open interest. We're going to take a look at, let's take a look at option contracts that saw at least 1,000 contracts or more increase in the open interest. We're going to set that to also, we're going to compare that change to the average daily option volume. So we're going to say that the open interest changed by 20% or more of what on average daily volume is in the options for that stock. So at least 20% there. Let's look for calls. Let's set the call price to be at least 25 cents or higher. Let's take a look at that the call had to increase by 10 cents or more on the day. Let's take a look at the implied volatility increased by, let's say, at least 10% on the day. I'm also going to look at stocks that are priced. Let's do $10 or higher. Okay, let me see how many so I'm narrowing it down to 40. Let me narrow it down a little bit more. Let's look for calls that the delta close at the money or out of the money. So 0 to 50 delta options. Okay, so let me see. 28. All right, so filtered out 28. Let's just take a look at what's popping up on the list. So I see Adobe here. Now these also expirations are with this little E means that they're going to cover an earnings event. So a lot of these could be just buildups in going into the earnings event. But anyway, let's take a look at what happened here. So Adobe, that was up 9.1% yesterday. to $520.49. We're looking at the 620 call in October 16th. So we see that's way out of the money right now, $100, almost $90 out of the money. That option closed at $9.70, up 878. Also, the implied volatility was up 41.7%, and the open interest on that line changed by 9,931 contracts to 10,069. That change, 9,931, that represents 45.7% of the average daily volume in that option. So you see 21,712 options on average trade a day, just on that line, almost 10,000 contracts in open interest increase. So ANF up 2.7% yesterday in the stock. August 28th, that looks like today, just reporting before the market opens. Looks like the 11.5 call closed 63 cents, up 23 cents. Implied volatility was up 42.4%. Open interest on that line, 2,310 contracts traded hands. That's 96.2% of the average daily volume. So let me just see what's going on in that stock. So let's see. So right now in the pre-market, it's up 8.2% ANF. So I think that probably already reported earnings. BILI, there might be a lot of, we'll see closing positions in there. BILI, that was up 3.7% yesterday in the stock. Looks like the September 18th calls, September 18th expiration, the 60 call, which is like $11, $12 out of the money. That closed at $1.14, up 53 cents. Implied volatility was up 14% in that option. Open interest increased by 5,441 contracts on that option, which represents 41.1% of the average daily volume. Looks like there was another call, the 55 call, also open interest increased in that call. Again, I think this one might have reported earnings yesterday after the close. So that's down 7.2% after reporting earnings yesterday. BOX, there's 1, 2, 3 of them made the list, all in the September 18th expiration. Looks like the 20, 21 call and the 25 call, all big open interest changes, long buildups in the BOX. That could be also earnings related yesterday after the market closed. So, some of these are just people coming in, taking a position prior to the earnings, up 10.3% today, prior to the market open. Let's go down to, let me see. There's a lot today on the list actually. So let's just take a look at DG. What is that? You mentioned some of them, right? Well,
Dollar General is DG.
Dollar General. Yeah. That looks also like going into earn. Let's do a couple that are not earnings related. What about this is Intuit, up 1.8% yesterday. Looks like the October 16th expiration, the 390 call, so almost like $50 out of the money. That option closed at $2.35, up $1.10. Implied volatility on that option up 10.3%. Open interest increased by 1,400 contracts on that line or in that option, which represents 51% of the average daily volume in Intuit. Let me take a look. Here's one that represented 214% of the average daily volume. So let's take a look at that. REGI, that was down 3.6%. Looking at the September 50 call, so $13 out of the money. September 18th expiration 50 call. That option goes at 28 cents. Implied volatility was up 26.6%. the open interest increased by 1,131 contracts to 6,916 in that long buildup. Let me see what is Reggie? Renewable energy. I'm not sure. Do you know that stock, Will?
I don't know Reggie.
Okay. Here's one, KC. So big as a percentage of average daily volume. I'm seeing some big open interest changes. Oh, sorry, KC right here. So two of them in KC. The September 18th 40 call, September 18th expiration 45 call. Big open interest changes there. Stock was up 4.7%. Let me just make sure. What's KC?
Looks like a cloud company.
Oh, okay. So that's up 2.6% in the pre-market hours, up 4.7% yesterday. Looks like the 40 call closed at $1.68, up $1.13. Implied volatility in there up 41.8%. Open interest increased by almost 1,900 contracts on that line. The 45 call, almost $10 out of the money. That call closed at 88 cents, up 70 cents on the day. Implied volatility increased 44.9%. The open interest increased by 2,200 contracts in the calls. That represents 331% of the average daily volume. So you could see on average, if you took the average of all option contracts, 664 contracts trade hands just yesterday. You know, the open interest on that line up 2,200 contracts.
Hey, D.
Yep.
We have a new fan of Market Chameleon on the YouTube Live, XYZ. He's asking, could you just walk through again how you got to this screen?
The open interest screen?
Yeah.
So under the options over here, menu, I go down to OI analysis, open interest analysis. Once I click over to here, you have different reports. You'll land on this one. So I just go kind of over here by contract, by option contract, because I like to use the filters and filter out, things that I'm looking for. So that's how I got to the by option contract.
Perfect. Hopefully that helps, XYZ. Listen, everyone on YouTube, please give us a thumbs up. And if you're not subscribed, XYZ, I don't know if you're subscribed or not, but subscribing is a big deal. It alerts you to whenever we put out a new video, a how-to video, whenever the show goes live. So it's a good thing to do to subscribe. Sorry.
Yeah, because if you subscribe to YouTube, YouTube just gives you kind of notifications if we're going live or we post like a video guide. This way, you could keep it gives you a notification even on your mobile device.
Yeah. While we've stopped, we did have a question. Melville joined us late. And
okay.
He stocks that are reporting after the close. I don't know if you could circle back and look at them. The first one is WDAY.
WDAY.
Yep.
So this one today after the market close. So let's take a look at WDAI from this perspective. Let me just move this. So here's WDAY. So these bars over here, this shows you what the options were implying to move up or down in either direction. And the green, that shows you the actual move, the stock experience. So in this one that I have hovering over, the implied move was up or down 7%. The actual move on May 27th after the reported earnings. So that would look at, the next day, what was the price reaction? It was up 7.1%. So almost in line with what they're anticipating. These red bars, that's the actual move to the downside. So the one I'm hovering over now is anticipating that day a move of 6.1% in either direction. The actual move was up 4.7%. So here we see a big one busted through to the upside, to the downside. So let's take a look at WDAY. It looks like the options overestimated the move 75% of the time in the last 12 quarters. The average of the implied moves prior to earnings, the anticipation was up or down 6.6%. the average of the actual moves was up 5%, so we get a 1.6% differential there. Here's how the long straddles performed. So this is looking at buying the straddle, buying the put, and buying the put and call at the money day before earnings, and how it performed to the day after earnings. So that was only a winner 27% of the time for an average loss of 20%. Long strangle, buying the 25 delta out of the money call and out of the money put, that was a winner only 17% of the time for an average loss of 48%. Credit iron butterfly, that's selling the at the money straddle, buying the wings for protection. That was a winner 60% of the time for an average gain of 51%. Credit iron condor, that's selling out of the money call spread, selling the out of the money put spread. That was a winner 83% of the time for an average gain of 34%. Let's take a look at the implied vol crush. So this is looking right now on the implied vol crush. That's looking at not the near term expiration, but an expiration that's 30 trading days to go. Okay, so 30 trading days to go. What tended to happen? So the average implied volatility crush was 22% after reporting earnings. So the day before earnings, the average implied volatility was 43.9%. Day after earnings, the average implied volatility was 34.5%. 5 days later, the average implied volatility was 34.9%. So right around there, even ticked up a little bit more 5 days later. So here's what it looked like. Here's what it looks like today. So over here, 2 days before as of yesterday's close, implied volatility on that 30-day is 52.2. We see on average, it's been 43.8, high 52.2, which is right here, low 34.9. And here's the day after earnings, average 34.5, high 51.7, low 27.4. So that's really quickly from the perspective of implied, the move and the implied volatility. Was that all his question? Hopefully it got that.
That was super helpful. The other one was, I think it was VMware. So much chat. It's VMW.
VMW?
Yep. Victor, Mike, Will.
VMW. Okay, that's today after the market closed. So let's take a look here. Again, this is the historical, the implied, what the markets were implying versus the actual moves. We see here that it was 50-50 half the time. It overestimated the move half the time. It underestimated the average of the implied moves going into earnings, was anticipating a move of 5.5% in either direction. The average of the actual moves was 5.6%. We see here long straddle was a winner 60% of the time for an average gain of 9%. Long strangle was 50% of the time winner, 50% loser, but an average loss of 6%. Credit iron condor, that was a winner 44% of the time for an average loss of 24%. Let's take a look at the implied volatility crush. So looking at that 30-day constant maturity, the average implied volatility decrease day after earnings was 19%. Going day before earnings, average implied volatility was 40.9%. The day after, average implied volatility was 33.4%. 5 days later, the average implied volatility was 31.3%. So that's VMW here. We could also let me take a look at the stock patterns here. So we see here, this is what it tended to do. So after reporting earnings, half the time it gapped higher, half the time it gapped lower, average loss of 0.5%. The magnitude on average of the gap move up or down was 4.8%, with the high move of 8.5%. So get like here, 8.5% a gap to the upside last reported earnings. It seems to me, that, and here's the average move from the open to the high, 2.5%, open to the low, 2.5%. It tended to increase 58% of the time from the open, decreased 42% of the time from the open, but the average, on average, it lost 0.4% in the last 12 quarters. So that's how this stock looked from a historical perspective. VMW.
Awesome.
That was it.
Yep.
All right, and thank you for the questions, and that helps also just come up with other ideas for for people who are watching. So it's very helpful just to even see what people are looking at. Let's take a look at really quickly vertical spreads. Now these are put spreads, selling put spreads. So you have like a bullish outlook. And let's take a look at today. I'm going to just go to the predefined ones, and let's take a look at a bullish play with strong seasonality. So this is looking at expirations from today to expiration. Historically, it was a stronger seasonal period for these stocks. So let's take a look what popped up here. Apple up here closed at $506. $506. It's looking at the September 18th expiration, selling the $495 put, buying the $490 put. That's a $1.95 credit. We think it's worth 91 cents. So that's a 34.1% theoretical edge. Historical win rate on that is 82.6%. So we see that if the stock stays above $495 on September 18th expiration, which is it's already, well above there. But if it stays above $495, that's a 63.9% return, money at risk. So if you buy it, if the stock goes below $490, you got to buy back that spread for $5. The difference between the strikes, you received $1.95. If you buy back for $5, that's a $3.05 loss. But so that's your money at risk. But if you make $1.95, it stays above $4.95, that's a 63.9% return. Microsoft, and here's the seasonality. Let's take a look. So historically, between August 26th, yesterday's close, to September 18th, the last 12 years, Apple increased 75% of the time, decreased 25% of the time for an average move, median move 3.9%, an average move of 2.1% during that seasonal period. Okay, so that's where you go to look at that. Microsoft closed at 221.06. We're looking at the September 18th expiration, selling the 217.5 put, buying the 212.5 put. That the credit for that is $1.65. We think it's worth 90 cents. That gives you a theoretical edge of 22.3%. With a historical win rate of 80.6. If that stock remains above 217.5, that's a 49.3% return on September 18th expiration. Facebook closed 304.15. We're looking at the September 18th 300 put, selling 300 put, buying the 295 put strike for $2.25 credit. We think theoretically it's worth $1.02. That gives you a 44.6% theoretical edge with a historical win rate of 77.6%. If that stock remains above 300 on September 18th expiration, the return on your money at risk, 81.8%. Visa makes that list, closed at $210.21. That's also looking at September 18th expiration, selling the 207.5 put, buying the 202.5 put for $1.36 credit. We think it's worth 72 cents, which gives you a theoretical edge of 17.5%. The historical win rate on that is 82.6%. That stock remains above 207.5 on September 18th. That's a 37.4% return on your money at risk. Here's SPY. Let's take a look at a couple in SPY here. That closed 347.55. Let's say September 16th expiration. It's looking at selling the 344 put, buying the 340 put for 96 cents credit. We think it's worth 56 cents. So that's a 13.3% theoretical edge with a historical win rate of 84.1%. That return will be 31.6% if that stock closes above 344 at expiration. Again, it's already above 344. So as long as it just kind of sits here, goes higher, but doesn't move, can move a little bit lower, but stays above 344, 31% return.
Hey, D, be aware we're about a minute away from this bell.
Okay.
ringing.
So thanks everybody for joining us. I'm going to let you guys go do some trading. And yeah, thank you for all the questions.
Awesome job, buddy. Awesome job.
Okay.
All right,
Thanks.
everyone, have a safe trading day. We will see you tomorrow morning, correct, D?
Yep.
All right.
See you guys tomorrow. Have a
Stay
great
safe,
day.
everyone. Safe trading.
Bye.